Patrick, I have a large apartment building. It's over $1 million. It needs a lot of repairs. I want to fix it up, I want to buy it, and I want to turn around and sell it. What's the best type of loan, in your opinion, to get for that?
Well, in our situation, because we ourselves have been developers in the past and we still currently are in that particular marketplace, the hard money or bridge loan is typically going to be the best thing that can happen because of how fast those loans can happen.
What do you mean by that?
Well, take for example, a bank. A bank is going to look at a situation and say, what is the debt service coverage ratio, or they're going to call it DSCR. The debt service coverage ratio, they want to know that the property itself is going to be able to pay back on the amount of money that was borrowed. So I'll give you an example. If you have a property that the note payment is going to be $100 a month, their debt service coverage ratio, they might want to know, is at 1.3, which means that they're going to be able to get 130. If you borrowed 100, they want, or the payment's 100, they want to know that you're taking in 130 to make that payment.
So can afford the loan.
Who can afford the loan? In our particular case, we understand that there's a number of mitigating factors about making a loan on a hard money or bridge loan. For example, in the past, our company has purchased properties that might only be 12% occupied, or 20% occupied, or 50% occupied, but certainly have not been able to pay for the loan themselves. We understand that in that interim, that bridge to getting it established long term, that's when you need a bridge lender. And that's where our money comes in, because we understand that in that period of that building, you're not going to be able to do the debt coverage or the debt service. So we make sure that that's put inside of the loan, and we make sure that there's reserves set aside so that those payments are being made for you.
So I can buy the property now, have a couple of payments in reserve, and get enough money in, or I should be contributing some amount of money into this thing, to, if I use my money, to go ahead and fix the property up. What if my money's just a little short? Can we, are there times that a bridge loan will pay more than just the purchase price to contribute to the
Absolutely.
improvements?
We've done more than the purchase price if it's going into the improvements. Typically, we need to know that the asset's going to hold off and do things on the value. Because we're asset-based lenders. We're not going to come in and say, for example, we're going to loan you 120% of the purchase price and that you put no money into it.
Right.
We want to know that there's what they call skin in the game. Skin in the game means that we're wanting to be your partner in the deal as far as loaning money and getting things done. But we also want to know that it's going to sound terrible to say this, but it's going to hurt to walk away. We want to know that there's going to be... We're a partner. We don't want someone that says, hey, look, things are going a little bit bad, we're just going to run off. We want someone that's going to come to us and say, hey, Patrick, we're having some difficulty here, and you guys do this kind of work. What can we do together to make this project successful? And that's an advantage of TexasBridgeLender.com, is that we're there to be your partners all the way through.
Thanks for that.
You're welcome.